Let's see what happens. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. We'll just make sure YouTube's working here. Looks like it's go. Hello, everyone. And it's running. Yay. Okay, cool. All right. Today is Thursday. It is the 5th of December. Holy moly. Now we're going to be racing through December. You only have, 19 shopping days left until Christmas. Good luck, everyone. But what I see in the broader market, we actually had a fun Thursdays is our baby powder report from Julian. Excuse me. So we had a really nice presentation from Julian through the day talking about Bitcoin and stock markets and gold, and we looked at a few different stocks. So it was a really refreshing approach looking at his use of the Tom DeMark indicator and Keltner channels and his RSI. Very unique approach. Great stuff. And actually, I think we have planned, I don't know when it's going to launch, but Julian's going to do sort of like a 1-minute market summary video that we're going to try and add to this stream. Because, Brian, there's no way he could talk 1 minute. That'd be impossible. But look forward to that in the near future. I'm super stoked for that content for you guys. But here in the short term, what are we doing here today? Risk on, risk off. We always like to sort of start off with what's going on in the world. Stocks kind of sideways. Oil uppy. From what I understand, lots and lots of incentive to keep the oil market up. The Saudi Aramco IPO, something like $1.2 trillion, biggest IPO ever, is coming to the market. And I got a funny feeling they're trying to keep oil prices up into that. It's interesting to see that we're starting to get correlation back in things like crypto and oil and stocks. We'll see if that sticks around. Obviously, we had a big disconnect there about a month or so ago. I'm seeing some mixed messages here in the risk-off assets. You can see gold working its way up a little bit higher. Yen's trying to stabilize here. U.S. dollar's really coming off. And the bonds are, I would say, just sideways after this insane volatility over the past couple of days. If we look at that bond chart, you can see it's trying to calm down a little bit here. We did talk lots about the gold through the daily brief here today, wondering whether maybe this might be sort of a buy the rumor and their bidding price up. And of course, you can see reload zones are just on top of us here. So maybe we get the non-farm payrolls out to first thing tomorrow morning. And we were wondering, all the gold traders and stuff looking at the short-term charts, that it looks like this thing's trying to push higher here in the short term. But maybe that's one of these buy the rumor, and then, it tops out tomorrow, sell the news, because on the lower time frames, starting to look a little bit exhausted in here. It's interesting to see that biggest gold stock in the world's trying to hold on to his double bottom breakout level. We'll see how that goes. And the old biggest gold stock in the world that wants the title back, they announced they're going to buy $1 billion worth of their own stock back. He's launching himself higher here, Newmont, and my hunch is Newmont's probably got a date up in the high 40s. And you put it all together, gold stocks still working their way higher. Again, that kind of conversation, are we buying the rumor and then we get some sort of blow off top first thing tomorrow morning on that employment report? You can see we're coming up against the old highs here on the gold stock index. So be cognizant of that we are actually coming up into actually a technical objective here. So with that said, US dollar, we've been talking about this recently, top of the range, way up top, bottom end of the range, way down below. So really, really wide playground here. And we're just sort of bouncing back and forth between extremes. They wash the stops on the top. They've washed the stops on the bottom. And it actually looks to me like, same sort of thing. Sell the rumor, maybe into that non-farm payrolls number, which I'm hearing, services sector, they're kind of worried about their jobs numbers. So that's probably one reason why things are a bit heavy here. Sell the rumor, and then on that non-farm payrolls, we get a release by the news. So let's see how this plays against these kilos here. We might just AB equals CD and really crap out here on the US dollar. If that's the case, then we probably could see that gold market move higher. Um, risk on, risk off, we can see that the stocks have taken a bit of a pause. We talked yesterday and also through the daily brief today that actually the 50% rule retracement of things like the NASDAQ actually does represent to some traders actually an entry window. And notice that that basically just filled in the gap, 50% retracement on the this is the NASDAQ 100 ETF. But for a guy like me, I'm all about reload zones and trying to short against tops. So that means I can't really entertain the idea of hunting a put unless we started failing up top here. But technically speaking, it doesn't surprise me to see that the market has stopped on that 50% retracement. Where we go from here, my hunch is it's all about employment report tomorrow. And given this insane volatility, there's nothing really for me to do right here just yet. And as I had said there just a moment ago, I'm kind of thinking the oil market, they want to keep it bid up into that IPO event. We had the Joby Gap event yesterday. You can see that we went through the highs. Technically, that's a buy signal. And I notice our energy stocks are doing pretty well here. So I think on balance, they're feeling pretty good. Bonds, like we said, maybe calming down a little bit after the insane volatility of late. Clearly, this is going to be driven by whatever that employment report comes out tomorrow. I think you can easily see we have a nice little wedge that's developing. I do have my puts on for the spring, but they're playing a trade down into 50% rules way down here. So I'm not going to touch this thing until we get down into here. But you can see we are building towards some sort of apex release event, and I think that's going to be all about that employment report tomorrow. And similarly with the gold, you can see the double bottom. Like I said, recently gold has actually performed pretty well here. And then seasonally, I think we can make the argument that it makes sense that we could be sort of heading into sort of a seasonally acceptable buying window. And maybe we get like a blow off top here into that employment report. But if you did want to be a buyer of gold, whatever that ultimate high is, you probably want to do things like reload zones. And if we get some sort of blow off top and then pull back following that event tomorrow, we can start hunting longs against candle body lows, reload zones, all that kind of stuff. And maybe probably the next like week or two ahead of us. So let's see how this plays out. As for now, we actually do have a double bottom there, so that's encouraging. And we're seeing a lot of gold stocks. I've shown you recently some looking pretty good. Names in particular, it's sort of like the Lord giveth and the Lord taketh awayeth, but this is a really good example of why I do the TRISOF. In essence here, we have a little experiment account Zach and I are running with. We just threw a couple grand at it to trade these penny stock options. And we throw $100 at an idea. Well, here's a name where hopefully you can see the bottom down here. We threw $100 at the call options here. And we actually took profits on this gap fill here today. And the whole thing netted us at the end of the day. We bought 3 calls at 30 cents, which equated to about $95 after costs. And we sold the remaining call that we had on the books here today at $2. And we sold 2 of the 3 calls at 65 cents, double our purchase price for another $1.30. So at the end of the day, we took $100 and turned it into about $300-400. Not a bad living. And it just goes to show what happens when a trade idea, these TRISOFs work. It's a 300+% gain. Here's one. We went and bought a call option, and it's doing absolutely nothing right now. We might lose $100 on this trade. But the interesting thing is, if you can take $200-300 away from a winning trade idea, then that actually means that you don't even have to be right 50% of the time. And you can have 50% of your ideas do like this Kirk right here where it's doing absolutely nothing. And it might just crap out and go to zero. Who knows? But because we threw $100 at the trade, so what? They're just option trades. So, really good example. And one note, we run the register today. And another note, this is a spring option. I think it's like a May option that we bought. There's nothing to do. But we look at the screen and we go, oh, one massive up and one massive down. And really, at the end of the day, we actually see our account balance go up because we only threw $100 at this thing. And, you know, like I said, on the remaining position today, we just took $200 that was free money from us. So, really good example of how I run my portfolios. Ring the register. Yes, we're in the position, but there's nothing really to do. And you never know. By the time the spring rolls around, maybe we get 50% retracements of this move. Technically, it's perfectly logical, but it ain't today for Kirk. All right, well, so with that said, you know, it's a good example of one winner, one bleh, and how I run my portfolios. Heading over to crypto, I had lots of talk in the daily brief today about potential W's, and that's all it is. And actually, I had to spend some time even after the daily brief just reviewing with some people. They're like, "Oh, are you getting super bullish here now?" And I'm like, "No, this is nothing more than just potential interest. In that, we do like to see W's on other sides of trend lines. So we did get a nice test of the trend line from the other side, which is great to see. And then also, too, we have this trend line coming off of the bottom that banged into that level. And there's good old Mountain Man. We talked about liquidity events. That's a pretty significant level, I think, for Bitcoin. We rallied away from it. We pulled back. And then, you know, off the lower time frames, this looks like absolute chaos on the Bitcoin chart right now. And, you know, they have these trading competitions on sites like Bybit. I actually think that a lot of the action that you saw in here was just simply a market that's not trading, but a ton of participants taking bets that they don't really know what the heck's going on. So as a result, you just get tons of stopwatch moves all over the place. You know, from my trading perspective, I took a little shot on this Bybit. And, you know, I think it's really good full disclosure information for all you guys. I took a little shot on the long side up top here and got out. And that trade, you know, this is not a bad trade. Maybe a little sloppy on execution. But this trade, I actually made an outright mistake where I shorted a level. Market told me to move my stop to scratch, and I didn't actually execute the trade correctly. So this competition's actually been a really good exercise for me, just to simply demonstrate that, hey, I'm getting a little sloppy, and I need to crisp things up a little bit. I put a tweet out yesterday, which I thought was hilarious. You know, those people that trade Gann angles, these purple lines are 8-to-1. They're sort of their preferred trade location tool. And I thought it was fascinating that as we rallied up into these highs, this candle wick, and, you know, if you're watching these videos and you want to learn something as opposed to just sort of, oh, well, I'll just follow the coattails of this guy, you know, try and take away from these videos the importance of these candle wicks. There's a whole bunch of trapped bulls, kind of like me, how I bought, but when the market broke down, they didn't obey risk management. They said, oh, no, it'll come back, it'll come back. And in essence, this counter trend rally actually gave them the opportunity to get out of that trade. So it's kind of cool how that was a 78.6. It had this candle wick up here where there's a bunch of trap bulls that wanted release. Then Gann's 8-to-1 angle, and wow, the range traders are having an absolute field day in here. And then the irony of it all is right on the other side of that Gann angle, 78.6 test. They did it again on the other side. Gann angle, 78.6 bottom, and back up we go. So my general message to the site right now is we could potentially, off the higher time frames, be trying to form a double bottom that it is on the other side of a trend line. So as a result, you know, it is potentially a tradable trade. Now, what I've suggested to my site people through daily brief and stuff is just simply let's let the W come back out, and then if we can get some sort of pullback and some sort of structure on the other side of it, we may actually have a nice higher time frame trade developing here. But this is going to take a lot of work to sort of fill out. And right now, I think you can just make the simple conclusion. Top of your range is about 7,800 and change. Let's call it 7,850 off of this Coinbase. Bottom end of your range is that 6,500. And until this thing actually does W out, all we are is stuck in a trading range. And the buy bit competition, people are just having a field day, just running stops right, left, and center. And then the final thing I'll leave you with today, I put this tweet out today because this is what I kind of think the market is right now. Is I don't think it's necessarily, I don't really like that, Bitcoin is the only cryptocurrency in the world kind of talk. I think each one of them goes through its phases. 2016, 2017, ridiculous bull market. And it needed a whole bunch of time to clean up. And this is kind of what I think that cleanup process looks like. And also seasonally too, buy when it snows, sell when it goes. I'm just seeing a lot of these kind of setups, and this one already has confirmed W's. So it's actually working a bottom. And I actually think this trade is working away. A nice 2.71 risk reward. And all you're asking for is just to move back to the 50% rule. So get out there, hunt those setups. There's no wrong way to read this line. In fact, I'm not even going to read it to you. You read it yourself. What you actually read is how you look at the world. And there's no wrong way to look at this. But I read this as now here. All right. Have yourselves a great day, everybody. I hope you enjoyed that presentation. All the best, and bye for now.